How well do you think Tesla stock will perform from here on? Today you will see why Dave Lee said that Tesla stock will go 10 times from here. Make sure to stay tuned and keep watching. A lot of investors and analysts alike are always on the lookout for well-performing stocks. The stock market is pretty much unpredictable, so they usually observe the movements of the stock they are on before buying in. Tesla stock has been getting a lot of traction as of late. Although it has been almost alarmingly fluctuating lately, some investors remain bullish on Tesla stock. In today's video, you'll see why Dave Lee said that Tesla stock will go 10 times from here. Tesla is an American automotive and clean energy company that designs and manufactures electric vehicles, battery energy storage from home to grid scale, solar panels and solar roof tiles, and related products and services. Tesla Motors was initially funded as an electric car maker by engineers Martin Eberhard and Mark Tarpenning in 2003. Elon Musk, the co-founder of PayPal, led the initial rounds of investing for Tesla before taking over as CEO. Tesla released its first electric car, called the Roadster, in 2008. The company designs, develops, manufactures, leases, and sells electric vehicles and energy generation and storage systems in the United States and other parts of the world. The company operates in two segments, automotive and energy generation and storage. Dave Lee is a known YouTube content creator who shares his thoughts on the vision and reason to invest, what is not taught at school about investing, and the mind-boggling power of assets to work and grow. According to him, his channel is a stream of consciousness of my real-time thoughts on investing and the world. Lee, whose channel tackles all there is to know in investing, is also known as a Tesla bull and enthusiast. He recently shared a post saying how he raised his initial Tesla stock capital for about 100 times their actual worth. He shared that when he originally bought Tesla stock, he expected it to expand 10 times, from $3 billion to $40 billion in market capitalization. Lee then made a statement that history could repeat itself. According to him, people are misinterpreting Tesla the way they misinterpreted the original iPhone. He firmly believes that Tesla is just getting started, while embracing complexity through innovation. The known investor shared his surprise with how his Tesla stock expanded 100 times within 8 years of holding common stock. Because of this, he believes that the stock has the potential to go higher, perhaps, or hopefully, 100 times more in another 8 years. It is no secret, in fact, a widely spread and talked about news of how well Tesla stock performed in the first quarter of 2022. Although some investors lost faith in the company and decided to sell their stocks, Tesla exceeded all expectations, even that of Wall Street, and continued to perform well. Ronald Stephen Barron, an American mutual fund manager and investor and founder of the investment management firm called Barron Capital, said that Tesla comfortably surpassed Wall Street's expectations of $2.20 to $2.30 per share and $18 billion in revenue. Moreover, Tesla's operating profit was about $1 billion, is greater than what analysts expected it to be. This resulted in Tesla shares increasing by 5% in after-hours trading to $1,017 per share, which is a significant increase from around $976 at the close. Dave Lee continued to say that many people rely on their understanding of the earnings report, on how their firm of choice performed instead of taking significant consideration in analyst projections for EPS, or earnings per share, revenue, margin, and other metrics. Lee further stated that the problem with this strategy is that some analysts are not aware of the majority of ordinary stock shares. According to him, some analysts even work for corporations where they do not even own any stock, which results in their nonchalance regarding whether the company's earnings are positive or negative. Investors' and analysts' expectations for young, high-growth businesses are usually at odds, but Tesla has successfully surpassed said expectations. For example, Tesla's first quarter earnings exceeded analyst projections but met investors' expectations. What is your opinion on the future of Tesla stock? Let us know what you think by leaving a comment below. According to Lee, Tesla didn't initially have the momentum necessary to keep pushing and hitting all-time highs, since it barely met and exceeded market expectations. Hence, shares rose only 6% after the earnings call and announcement. However, this came as no surprise since loyal investors already had high expectations for Tesla and its management. This trust stemmed from Tesla's good delivery figures. Lee said that stock price is determined by its revenue. Production restrictions were one of the causes behind Tesla's first quarter performance and were a factor that caused the stock to fail to reach an all-time high. It can be remembered that Tesla's Giga Shanghai factory temporarily ceased operations when China enforced a zero-COVID policy when the pandemic spread across the globe in 2020. Still, Tesla appears to have things under control, which was reflected in the first quarter's success in 2022. Lee said that Tesla will need to show revenue growth to maintain its bullish rise. He added that they should deliver more automobiles every quarter than investors anticipate, and that the revenue should also exceed their expectations. With Tesla's aim to expand production by 50% by next year, an increase in the stock price should be expected. Besides Dave Lee, Gary Black also shared some projections on Tesla's future. Gary Black is the managing partner and co-founder of the Future Fund LLC, an SEC-registered investment advisor focused on investing in growth equities of companies that are changing the world. Gary has extensive experience spanning nearly 30 years in top management positions at some of the most well-respected global investment management firms. According to him, Tesla's market capitalization should be $4 trillion since it's currently worth $1.09 trillion. On $100 per share earnings, he allocates a 30 price-to-earnings ratio, which results in a $3,000 price target. He added that if 1.4 billion shares were outstanding, Tesla's market capitalization would reach $4 trillion. Black further stated that electric car penetration in the automobile industry will reach 60% by 2030, and that Tesla will have a 20% share of the EV market. He believes that by the end of the decade, Tesla will be able to deliver around 10 million vehicles per year, given that worldwide light vehicle sales have reached 85 million units. However, some analysts recently expressed concern about Tesla's stock's downward spiral trend. They believe that COVID-19 restrictions affected the Shanghai plant's manufacturing process, which then affected the number of vehicles produced by the plant, which, according to them, is significantly lower than their target number. However, Cathie Wood appears to be unbothered by such concerns. If you didn't know, Cathie Wood is an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. Wood is often called the most underrated investor in the game since she is incredibly persuasive in her investment arguments. Still, she's also got the proven results to back up her surprisingly discerning claims. Her firm, ARK Invest, even announced that they believe Tesla shares may well be worth $4,000 by 2026. In conclusion, Dave Lee remains bullish on Tesla stocks and constantly says that he is in this venture for the long haul. He added that he firmly believes that Tesla will see spectacular growth by 2030. Despite the fluctuation of its stock prices, Tesla remains the leading manufacturer of electric vehicles. What proves that Tesla is still on top of the electric vehicles or EVs industry? On December 28, 2021, Musk disclosed Tesla's stock sales totaling $16.4 billion since early November, amounting to nearly 10% of his stake in the company. On March 22, 2022, Tesla officially opened its German plant under Berlin, supplementing auto assembly plants in Shanghai, Texas, and California. Moreover, on March 28, 2022, Tesla disclosed plans for a stock split, conditional on stockholder approval, to expand the company's authorized number of shares at its 2022 annual meeting. From a conventional standpoint, TSLA, or Tesla stock, is still overvalued. However, there is more to a stock than just its earning and market cap. TSLA has been fundamentally overvalued for almost a decade, but it has still increased. However, as of late, Tesla stocks have been significantly dropping. It is currently sitting at $663.90, and it's gone down by 6.42%. However, it is to be noted that a lot of factors affected this drastic drop, and that Tesla is not the only company experiencing such a downward spiral in stocks. This has been brought about by a lot of unforeseen and unexpected happenings all over the globe. The COVID-19 pandemic, for one, affected manufacturers a great deal. For these reasons and the information mentioned above, from David Lee and other known investors, Lee believes that Tesla stock will go 10 times from here. Watch our other videos for more of this content.